Well, let's get across the market open now. Jimmy Jane joining us from GPA Capital. Jimmy, welcome. Good to have you on this Tuesday. Many more results to get across, of course. BHP has just dropped. What's your takeout from those headlines?
Morning, Andrew. It's I think what the market probably expected because obviously we've been living in a pretty high rallies of commodity prices, especially in the iron ore and also some of the copper exposures as well. So it wasn't something that was a big surprise, I guess, from the market. But they did really better than expected half year underlying profit, which was largely driven by the first half iron ore production and obviously with the copper price as well. So look, they recorded a pretty high, record metric tons, which is about 146.6 million of iron ore from their Western Australia operation, and they own that 100%. So that's a pretty strong result that we can potentially expect in the next two more quarters if the commodity prices support us here. I think that the main question that the investors will be asking is, especially from today's open, is how likely will the commodity prices stay at this level? And because the company obviously has demonstrated their ability to produce and show the good results. So the commodity price is what we'll be looking at. So it will be interesting to see how they open today.
All right. Well, look, more broadly, before we get into some specifics, what have you seen? I mean, I think we're about a fifth of the way through just in terms of the number of companies that have reported. Any particular trends you're seeing at the moment?
Yeah, look, with the interest rate hike that we saw in Australia, we were kind of, contemplating whether the real estate sector might, do well. Obviously, as the interest rate gets higher, the market definitely priced in a bit more tougher, glass into the reports of some of these real estate, developers out there. And one of the main ones that we saw was Abacus Storage, and is obviously, showed that result yesterday, and it was definitely in line with what the investors were expecting. So their full year distribution guidance was about 6.2%, so 2 cents, sorry, which was kind of reinforcing their stability in the earnings. And the stability is actually what the investors kind of want in this defensive RRT. Like if you look at it, banks, for example, when we saw that big jump by the CBA, that was largely, in our view, in fluctuating of funds from the commodities and also the gold runners out there. And I think that's what might slowly come back to. REITs has been a defensive sector for a lot of the investors out there. And, as we kind of see this volatility coming through from the US market and also even in domestic wise, I think the REITs might do well. So Abacus Storage Group with their, impressive result, it potentially might be a good pickup at this level.
Elsewhere in the property sector, you got a focus there on Stockland. What are you seeing?
Yeah, so it Stockland's a bit more diversified property group. So they did their really impressive operational result yesterday as well, particularly in their residential development division. So their settlement volumes jumped about 60% to about 3,100 lots, which is impressive. And what that kind of translates into is that their development profits are more than doubling, and also the funds operations up nearly 29%. So they're showing some really strong results, even despite the fact that we did see a lot of tough real estate market in the construction wise as well over the last 2 to 3 quarters. So I think the main thing is the outlook. Australia is still going through their housing shortage, and Stockland is one of the largest residential pipelines in the country. They've got about 92,000 more residential lots that they're in the development at the moment. So another great pickup at this level.
Jimmy, a number of retailers have reported. Yesterday, we had JB Hi-Fi considered one of the quality retail stocks on the local market. What did you take out of that? And of course, the issues to deal with at the moment are those rising interest rates and the effect that's going to have on spending.
Absolutely, and we like you said, Andrew. Market did price that in on the other companies, like let's say Temple and Webster when they released their result. It absolutely got punished by the market, not with their result, but just in terms of the market in the sector itself. So JB Hi-Fi was definitely a standout. They did deliver that very strong result, and it really surprised the market, obviously given this really tough retail environment. And the revenue in a headline was about $6.1 billion, and the profit was largely ahead of the expectation. So despite all this, I think the main kind of standout that we picked from the report was the margin expansion. So their gross margins increased significantly due to their strong cost control and their smart promotional strategies, and they got a very strict operating discipline, and I kind of call that every time we go to JB Hi-Fi, the quality of service and then the way they operate is very uniform in it, despite which store you go to in any city in Australia. So that's a very impressive results that they've demonstrated. But what's more even more impressive is probably given this interest rate is potentially going higher this year in Australia, the market still rewarded the company with such a strong performance yesterday. So they closed with 82.12 yesterday, and I think it will potentially have a higher open today as well. So really well done to the company.
Jimmy, more broadly, what are you seeing on the local index, I guess, comparisons, particularly with what we're seeing on Wall Street at the moment? Those stocks, well, the broader market, trending higher, but that volatility remaining.
Yeah, like I think that the key thing that we're seeing in Australia is, we are very driven by commodity prices. Whereas in the US, it's more obviously tech and AI driven. So we saw such a sharp sell-offs over the last couple of months in the US, like Microsoft, for example, where all these software companies are very struggling, even though that the market has priced in such a significant interest in these companies. So, for example, in Australia, with some of the kind of stocks that we should be pretty careful of, it is guys that has this kind of exposure. And Pro Medicus, for example, shows a good reason why such a highly geared valuation companies are sometimes where you make a lot of money in a bull run, but whenever we see a correction like this in the broader market, it kind of comes back very quickly. So I think that balance is very key. And most importantly, gold has obviously been a favorite pick for a lot of investors, but you also need to understand that gold is at the all-time high at the moment. So if we are continuously pricing in a higher gold price, that also means that the economy will struggle, because obviously a lot of the funds isn't fluctuating into companies like JB Hi-Fi, where it is keeping those jobs as well. So you just gotta have that balance, Andrew, and just to make sure that we have a well diversified sectors across the board.